Welcome to the world of power plays and strategic maneuvers. Today, we dive into the intriguing saga of Frasers Group and its aggressive investment strategies. In recent news, Frasers Group, led by the renowned Mike Ashley, has upped its stake in the electricals retailer AO and now owns a considerable 24.7% of the company. This move is significant, with other major shareholders trailing behind, Camelot Capital Partners owning 20.4%, and AO's CEO John Roberts with 18.3%. It's worth noting that Frasers Group's initial foray into AO was not too long ago in June 2023, when it acquired a stake of nearly 20%. So what's behind this investment strategy? Stay tuned as we delve deeper into this fascinating narrative. Frasers Group's investment in AO is not an isolated incident. It's part of a bigger strategy. A strategy that has seen this retail powerhouse consistently increase its stakes in a range of companies. From Boohoo to Currys, N Brown to ASOS, Frasers Group has been steadily expanding its portfolio. This pattern of investment is no random act. It's a calculated move from a company that knows the value of diversification. Each acquisition, each increase in a stake, adds another string to Frasers Group's bow. It might be fashion with Boohoo, electronics with Currys, or online retail with ASOS. Every move is a step towards creating a conglomerate that spans across multiple sectors. But it's not just about increasing stakes. Frasers Group has also shown a knack for spotting potential in struggling companies. Take, for instance, Studio Retail. This online retailer was on the brink of administration in 2022. But Frasers Group saw an opportunity where others saw a sinking ship. They swooped in and rescued Studio Retail from the jaws of administration, adding another company to their ever-growing list of investments. This pattern of investment, this strategy of diversification and rescue, it's a game plan that has served Frasers Group well. They continue to grow, continue to expand their reach across different sectors. But why? Why this strategy? Why these companies? There's a bigger picture here, a picture that only becomes clear when you take a deep dive into the financials of these companies. A picture that tells a story of calculated risk, of shrewd investments, and of a company that knows how to spot potential. But why is Frasers Group so interested in these companies? Let's dive deeper into the financials to find out. AO recently raised its profit guidance despite a fall in revenue, a seemingly paradoxical situation. Let's dissect this. At first glance, it may seem counterintuitive for a company to be optimistic about its profits while its revenue takes a dip. But dig a little deeper and you'll find that AO's strategy is a calculated one. The company attributes this decrease in revenue to the elimination of unprofitable sales. In essence, AO is trimming the fat, so to speak, focusing on quality over quantity. But what does this mean in terms of financial implications, you may ask? Well, by eliminating unprofitable sales, AO is streamlining its operations, cutting out processes and products that cost more to maintain than they generate. This strategy can potentially lead to a leaner, more efficient business model with an improved profit margin. Now let's consider how this might appeal to an investor like Frasers Group. Investors are always looking for companies that can generate profit, and they appreciate smart strategies that aim to increase profitability. By demonstrating a proactive approach to managing their operations and finances, AO is essentially showing potential investors that it's serious about maximizing profits, a move that is likely to appeal to Frasers Group and its investment strategy. But it's not just about the here and now. This strategy also suggests a focus on long-term sustainability. By eliminating unprofitable sales, AO is potentially setting itself up for more consistent profitability in the future. It's a strategy that signals foresight, prudence, and a commitment to financial health, which are all qualities that can make a company an attractive investment prospect. So what does this all mean for the future of AO and indeed Frasers Group? Let's explore. With Frasers Group steadily increasing its stake, the future of AO is becoming increasingly intertwined with Mike Ashley's empire. As the ownership pie grows, the influence of Frasers Group over AO's operations and strategic decisions is likely to become more pronounced. This could mean a shift in business strategy. with AO possibly aligning more closely with Frasers Group's other ventures, creating a synergy across all the businesses within the empire. It's also plausible that AO could become a stronger contender in the retail landscape, leveraging the resources and network of Frasers Group. On the other hand, there's an air of uncertainty. The aggressive investment strategy of Frasers Group could potentially lead to an overreach, and the consequences of such a move are yet to be seen. Regardless, one thing is clear. The retail landscape is set for interesting times ahead, with Frasers Group and AO at the heart of the action. The world of investments is a fascinating chess game, and we're here to keep you updated. Remember, knowledge is power.